This is Farm Progress, DatelineDrought.com, presented by Genuity Drought Guard Hybrids. Yes, we've swapped the order a little bit this week. Maybe you dropped in here to catch the forecast of agriculture meteorologist Greg Solier. He's off this evening. He'll be here tomorrow evening. In his absence, I've elected to talk a little bit about weather and pondering the possibility that in the months ahead, we'll have the kind of winter that will allow us to make up some of this moisture deficit. What kind of winter will we have? Does it necessarily follow that after that drier than normal, warmer than normal winter last year, going into this summer's intense drought and its heat, that we'll continue to have temperatures that'll be moderate and precipitation that'll be below normal? Well, the meteorologists say it doesn't necessarily follow that the pattern of summer will extend on into the winter. Now, some of us got some beneficial moisture over the weekend. Here at my studio, a few miles west of downtown Chicago, we had 2 inches of rain. And I can tell you, having watched it, nearly every drop of it soaked into the dry soils. I know that wasn't the case for everyone, and we still, of course, looking at that drought monitor map, have quite a deficit to make up to keep that winter wheat crop in good shape and to provide a good foundation for the production of other crops, those spring crops that we'll be planting in the spring of 2013. As is often the case with economists, we note that meteorologists quite often are in disagreement, and that seems to be the case on this winter forecast. The newspaper, I was reading an article here in the newspaper in Cedar Falls, Iowa, the Cedar Falls Courier, and they quoted a couple of meteorologists, one of them the National Weather Service meteorologist at Des Moines, taking a look at the Iowa forecast for the winter ahead. It was his belief, as he shared with the paper, that the precipitation in this winter should be just about normal, and he sees the temperatures being slightly above normal. But in that same article, they quoted a forecaster from AccuWeather. That firm sees that precip will be below normal, he said, and the temperatures, well, should be near normal. There's much at stake here, not just for farmers and ranchers, but think of all of the other livelihoods that depend on the kind of wintry weather that we get. Of course, snow removal firms, highway crews, highway departments, retailers, they have to decide whether or not to have so much product on hand to meet the needs of wintry weather. Then you have others like barge lines, trucking companies, airlines. They had a wonderful winter last year with very little precipitation, very little extreme cold weather. Their on-time performance was outstanding in the winter of 2011-2012. Well, here's something we can update you on that is remarkable in terms of its progress, and that's the harvest of 2012. Weekly crop bulletins came out today pointing out that 79% of the nation's corn crop, 79% has been harvested, well ahead of the 5-year average of 38%. In terms of the soybean harvest, it's 71% complete. That, too, is ahead of average. Generally, by this date, 58% of the beans have been brought in. The cotton harvest, well, that's a little bit different story. It's very close to average progress, with 28% of the cotton in now. Generally, by this date, it's 30% harvested by mid-October. Well, let's switch over to cover the markets for you now. Here as DatelineDrought.com continues, presented by Genuity Drought Guard Hybrids. From Farm Futures, here's Bryce Noor.
Futures prices moved sharply lower across the board on Monday, with both fundamental and technical forces hammering the market. Still, there were a few silver linings that shone through the storm clouds. Soybeans, for example, led the market lower despite another very strong week of export inspections. USDA put the total at 57.8 million bushels, more than doubling the rated forecast for the marketing year. China took only half the total, so other end users were still apparently happy to keep shipping previous purchases headed into last week's USDA report. November futures started weak Sunday night and got weaker when $15 support gave way, and the contract moved into the big gap from $14.78 to $14.93 created over the July 4th holiday. The good news is that the gap wasn't filled, and November almost managed to end above it, finishing the session down 30 at $14.92.5. Corn prices also suffered a technical meltdown, but there were more fundamental disappointments as well. Weekly export inspections totaled 17.2 million bushels, about the same as last week and still below the rate forecast by USDA. December futures couldn't hold the trend line off late September and October lows around 740, though it did hold above last week's low. December finished off 15.5 at 737.25. Wheat prices held up better than corn or soybeans, but still suffered selling and sympathy. A very poor week of export inspections and lack of export news in general didn't help. The total for the week was just 7 million bushels, less than a third of the amount needed every week for the rest of the marketing year to reach USDA's forecast. Forecasts for more dry weather on parts of the hard red winter wheat belt continue to lend some support, but it's hard for the market to focus on down the road when the here and now looks so bleak. December futures in Chicago and Kansas City broke below support lines, with Chicago trading at its worst level since July, ending 8.5 lower at 848.25. Kansas City was off 9 to 881.25, while Minneapolis finished down only 3.25 at 931. Keep up with the drought situation across the country by visiting www.datelinedrought.com.